Well, the man himself joins us, Prabodh Agrawal, Head of Research with IIFL Institutional Equities. Prabodh, good morning. Thank you for joining us. It's not turning out to be a great period for Indian markets, and I'm not talking about global concerns, it's earnings. Numbers are very, very disappointing.
Yeah, that's true. The second quarter earnings season actually started off decently, but in the last week, actually, there have been some major disappointments. So I would still say it is a mixed set of numbers. The results that have been declared so far, about 40% of the companies have actually declared results better than our expectation. 40% actually have disappointed, and 20% are broadly in line. Now, the 40% which have disappointed,
their weightages are very high.
Yeah, those are pretty big numbers, and we saw, of course, a couple of large ones reporting on Friday, and that, of course, these are bellwether names which are representative of the activity on the ground. So therefore, that raises a lot of concern whether we are going to see any recovery in the next 2 quarters and even in FY17. And therefore, of course, the positive results have been overshadowed. But I would still say that the 40% of the companies which have reported good numbers are actually across a wide spectrum of industries. They include, of course, private banks, NBFCs, infra, auto, pharma companies. So these are the companies which have actually reported good numbers. So as I say, of course, the macro numbers may still look uncertain. The Nifty earning number may still look uncertain. But basically, we got to look at bottom-up companies, and there are a handful of companies, in fact, quite a few number of companies which are reporting decent numbers.
But that pie is getting smaller and smaller. I mean, the basic market assumption was that you buy private banks, you buy pharma, and then buy some consumer names, and then you're done with your asset allocation. Your outperformance will automatically come in. But within private banks, HDFC Bank, good numbers, Axis Bank, poor set of numbers. Within pharma, Lupin, horrible, Dr. Reddy, wow. Within IT, large cap IT, no ways, mid cap IT, great numbers. So some of these performing sectors also are now getting sliced and diced.
That's right. Especially in the private banks, of course, now some of the large private banks, now we have concern that the asset quality to a large extent mirrors that of PSU banks, and the problem may continue for a while. So yes, the universe is limited. The earnings recovery is uncertain. Just to recap, 5 months back, when I was in a program and earlier when we were talking to investors, we were talking about possibility of a decent earnings recovery in FY16. We were talking about 16-17% growth in earnings for Nifty. Now that has been cut down to 8%. So in the last 5 months, significant downgrades. Going ahead now, we thought that probably 2Q we are seeing the worst, but difficult to say whether this is the bottom. Probably, the 2 quarters will not see major recovery. FY17 right now, the consensus and our numbers suggest that we again expect a high teen kind of a growth. But then again, the conviction on that remains a bit low.
So where is all this leading us in the near term, at least, considering you have such a big impending decision of the Bihar election outcome, which the market is definitely going to have a keen eye on, and that could really move the market, either way.
Yeah, of course, Bihar elections are important, whatever people may say, but I think they would be important because if the NDA were to win, then of course that gives a shot in the arm for the NDA. It will blunt the opposition to some extent and then bolden the government to, carry forward the reform process. But if the JDU or the opposition were to win, then of course, then that will embolden the opposition, and the whole reform process could get further slowed down. So clearly, I think the markets are watching the Bihar elections very closely, and on 9th of November, we're going to see a big movement either way.
So what could be the range of the movement? Like, assuming that India gets a majority, what will happen immediately? And assuming that India loses, what happens to the market in terms of downside? Will this be a 4-5% move?
I would think so.
That's a big move.
Yeah, I would think so. That that people are waiting. I've been sort of on the road for a long time, meeting a lot of foreign institutional investors, and the awareness of the elections is very, very high. Everybody sort of is focused on the fact that some of the key legislations have not been passed. Even the sort of contentious legislations like GST has not been passed because of political opposition, and therefore people would take a setback in Bihar as a further delay in sort of the NDA getting a larger number of seats in the upper house, and therefore that would be a big disappointment. On the other hand, their victory would be regarded as a sort of way towards getting a. So I would think the markets would react pretty strongly either way.
If at all there is, a Grand Alliance victory, would that weakness be used as an opportunity to buy into, or would you then sort of be a little circumspect, wait and watch out for which way the market goes, whether there is further weakness, whether there is a silver lining to the dark clouds of earnings or not, and then take a call? Or is it a blind buy, that weakness that we get?
I would think, I would be a buyer in that weakness. I would think that, of course, there is a bit of a leap of faith. Right now there is nothing to suggest that, there is going to be there. But I still feel that with a 1 year plus view, we would be approaching the bottom, and, therefore, that weakness has to be used to buy into sectors or stocks that we like, which are not necessarily defensive, but which are pro-cyclical, which will benefit as the recovery picks up. So yes, but not expecting an upturn or an appreciation in the very near term.
I'm just saying that actually, if we roll the tape back, including me, all of us thought when we started the year that this would be the year of recovery. This would be year when we will see green shoots and we will see a general uptick in the economic earnings trajectory. That has not happened, and that in a sense has created a near-term vacuum. Why are you confident that 6 months from now, 3 months, 3 quarters from now, recovery will come back? Because we've argued this in the past that we are close to recovery, but L&T numbers, if they are anything to go by.
My God, you stole my thought. I was just coming to that. I mean, hearing the L&T management doesn't really give you that confidence at all. It seems like things are going to get worse before they, turn tide and become better.
Yeah, of course, looking at those numbers and the management commentary and guidance, it is clearly the case that the things on the ground are far from what the expectations have been. The execution remains problem, profitability is under pressure, and the order inflow or the capex cycle will take a while to recover. It's very, very clear from L&T being the bellwether of that segment. The way I look at it is, yes, as I said, the visibility is low. There are a few set of numbers which are looking positive. So some industry indicators suggest that the recovery is on the way. Let me just point out what are the things. So for example, if you look at today, commercial vehicle sales have been strong for a while, for almost a year now. Of course, there has been a bit of preponing in last month, but I don't think even from November onwards, sales growth should be mid to high teens. Passenger car sales have been growing in mid to mid single digit. Two-wheeler sales, of course, have been weak. Mobile revenue data has been strong on the data side. Ad revenue growth has been growing in mid single digits. Road toll collections have been growing at mid to high teens. This is basically toll collection across major roads in the country, and this is mainly goods rather than passengers, so indicates some pickup in the economic activity. FDI is up 30% YOY. This is actual investment which is happening on the ground. Office absorption, if you look at office absorption, if that is an indicator of an economic activity, is up 20% YOY, and it's up almost 70% from 2013
why
levels.
Why is that not getting translated into numbers? It should reflect somewhere, right? I mean, all these economic activities somewhere has to get captured. It's not getting captured, at least at the corporate level.
So the thing is that it is getting captured for select corporates. So for example, select private banks and NBFCs are reporting very strong numbers.
Fair point.
Select infra companies, particularly which are active in the road, power and railway segment, are doing very well. If you look at, the automobile companies, as I said, the passenger car manufacturers or the commercial manufacturers or some of the auto ancillaries are doing well. Cement, we are yet to see a demand recovery, but cement volume growth is flat, the prices are flat. So yes, there are very few in the companies which are capturing the upturn, but large number of companies still are unaffected. That's why that makes us very cautious.
Right, Prabodh, so really appreciate your time. Glad you could join us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.